Donald Trump is back in the White House. His return has sent ripples through the cryptocurrency world. Trump's past statements and recent actions signal a significant shift in U.S. crypto policy. The markets are watching closely, trying to decipher what this new era means for digital assets. Trump's stance on cryptocurrencies has evolved. He once called Bitcoin a scam. Now he is exploring ways to integrate it into the U.S. financial system. This change in attitude is significant and could have a profound impact on the future of finance. The first few days of Trump's presidency have been eventful. He has signed executive orders, made pronouncements about Bitcoin, and assembled a team to tackle crypto regulation. These early moves suggest that Trump is serious about making his mark on the crypto world. The world waits to see how these actions translate into concrete policies. The future of cryptocurrency in the United States hinges on the decisions made in the coming months. One thing is certain, the Trump era will be anything but boring for the crypto market. On January 23, 2025, President Trump signed an executive order focusing on cryptocurrency regulation and innovation. This move is significant, signaling a shift towards a more structured approach to cryptocurrencies. The executive order calls for the creation of a working group responsible for developing a comprehensive regulatory framework for cryptocurrencies. This group will be composed of representatives from various government agencies, including the Treasury Department, the Federal Reserve, and the Securities and Exchange Commission, SEC. The working group has been tasked with addressing key issues related to cryptocurrencies, such as consumer protection, financial stability, and the prevention of illicit activities. They're also tasked with exploring the potential for a U.S. central bank digital currency, CBDC. The executive order emphasizes the need for a balanced approach to regulation, calling for fostering innovation while mitigating risks. This approach is designed to protect investors and the financial system, while also allowing the crypto industry to continue to grow and innovate. One of the most intriguing proposals floated by the Trump administration is the creation of a national digital asset stockpile. This idea, which gained traction during Trump's campaign, suggests that the U.S. government might consider holding Bitcoin and other cryptocurrencies as part of its reserves. The concept of a national digital asset stockpile is still in its early stages. The executive order does not establish such a reserve, but it does call for a comprehensive evaluation of the idea. This suggests that the administration is seriously considering the potential benefits and risks of such a move. Proponents of a national digital asset stockpile argue that it could provide several benefits, such as hedging against inflation and reducing the country's reliance on the U.S. dollar. Additionally, they suggest that it could position the U.S. as a leader in the global digital asset space. However, critics express concerns about the potential risks. They worry that government involvement in the crypto market could create market distortions. They also point to the volatility of cryptocurrencies, arguing that this makes them unsuitable for inclusion in national reserves. In a move that surprised many, President Trump reversed his predecessor's directive to research a U.S. central bank digital currency, CBDC. The Trump administration has explicitly prohibited the establishment, issuance, or circulation of a digital dollar. This decision represents a significant departure from the previous administration's approach to digital currencies. Trump's decision to halt CBDC development is rooted in his belief that such a move would give the government too much control over citizens' finances. He has repeatedly expressed concerns about the potential for a CBDC to be used for surveillance and control. This stance resonates with many libertarians and cryptocurrency enthusiasts who share similar concerns. The prohibition of a CBDC has significant implications for the future of the U.S. financial system, signaling a shift away from the global trend towards central bank-issued digital currencies. Many countries are exploring or have already launched their own CBDCs, making the U.S. a notable outlier in this regard. The decision to forego a CBDC for now does not necessarily mean that the U.S. is turning its back on digital innovation in finance. The executive order calls for the exploration of other ways to modernize the financial system, which could include supporting the development of private sector digital currencies and exploring blockchain technology for other applications. Section 5. Market reactions, uncertainty, and optimism. The initial reactions to Trump's crypto moves have been mixed. The markets are still trying to assess the potential impact of these new policies. There is a sense of uncertainty, but also a glimmer of optimism. The executive order on cryptocurrency regulation has been met with cautious optimism by some in the crypto industry. They see it as a positive step towards greater regulatory clarity. This clarity could attract more institutional investors. It could also help to legitimize the industry as a whole. However, others are more skeptical. They worry that the increased regulation could stifle innovation. They fear that it could make it more difficult for new crypto businesses to thrive. The composition of the working group has also drawn scrutiny. Some critics question whether the chosen members will genuinely represent the interests of the crypto community. Section 6. Crypto Implications, Support, Clarity, and Growth. The potential implications of Trump's crypto policies for the cryptocurrency market are far-reaching. They could reshape the landscape of the industry in the years to come. One of the most significant potential impacts is the increased government support for cryptocurrencies. The creation of a national digital asset stockpile, if it comes to fruition, would be a major endorsement of Bitcoin and other cryptocurrencies. This could lead to a surge in demand and prices. The executive order's focus on regulatory clarity is also expected to have a significant impact. A clear regulatory framework could make it easier for businesses to operate in the crypto space. It could also give investors more confidence to participate in the market. This could lead to increased investment and growth in the industry. However, there are also potential downsides to consider. Increased regulation, while providing clarity, could also make it more difficult for smaller companies to compete. There is a risk that the crypto industry could become more consolidated. This could stifle innovation and limit consumer choice. Section 7. Stock market impact, tech and finance in focus. The Trump administration's stance on cryptocurrencies is also having a ripple effect on the stock market. While the overall impact remains to be seen, certain sectors are experiencing noticeable shifts. The technology sector, particularly companies involved in blockchain technology and cryptocurrency mining, is experiencing heightened interest. The potential for increased government support and a clearer regulatory environment is attracting investors to these companies. This is driving up stock prices and creating new investment opportunities. The financial sector is also feeling the impact. Traditional financial institutions are increasingly exploring blockchain technology and digital assets. They are looking for ways to integrate these innovations into their existing operations. This shift is reflected in their investment strategies and partnerships with fintech companies. However, the market is not without its concerns. Some investors are wary of the potential for conflict of interest. This is due to Trump's personal involvement in the crypto market. The lack of transparency surrounding his own holdings raises questions about the objectivity of his administration's policies. Section 8. The Trump Factor, Personal Holdings and Influence. Adding another layer of complexity to the situation is Donald Trump's personal involvement in the cryptocurrency market. While the extent of his holdings remains unclear, his past statements and the actions of those close to him suggest a personal interest in the success of certain cryptocurrencies. During his campaign, Trump launched his own digital token, Dollar Trump. This move, while controversial, demonstrated his willingness to engage with the crypto market directly. The token's price saw significant fluctuations, reflecting the volatile nature of both the crypto market and Trump's own brand. Furthermore, Vice President J.D. Vance's disclosed ownership of a significant amount of Bitcoin raises questions about potential conflicts of interest within the administration. Critics argue that personal financial stakes in the crypto market could influence policy decisions, potentially creating an uneven playing field. The lack of transparency surrounding Trump's personal crypto holdings only adds to the uncertainty. This lack of clarity could erode investor confidence and create volatility in the market. Section 9. The Future. Navigating Uncertainty and Potential. The future of cryptocurrency and the stock market under the Trump administration is uncertain. There are potential benefits and risks associated with the administration's approach to digital assets. The executive order on cryptocurrency regulation is a step towards creating a more structured environment for the industry. However, the specific regulations that emerge from the working group will be crucial in determining the long-term impact. The potential creation of a national digital asset stockpile could be a game changer for the crypto market. It could signal a major shift in how governments view and interact with cryptocurrencies. However, the logistics and implications of such a move require careful consideration. The stock market is likely to see continued volatility as investors react to new developments and policy announcements. The technology and financial sectors in particular will be at the forefront of this change. The Trump factor remains a wild card. His personal interest in the crypto market and the lack of transparency surrounding his holdings create a level of uncertainty that could impact market sentiment. The coming months will be crucial in determining the direction of the crypto market and the broader financial landscape under the Trump administration. It is a time of both uncertainty and potential. The world is watching closely as the new administration charts its course in the uncharted waters of the digital asset revolution.